chemical, pharma and agro intermediate and FMCG segment was 67%, 19% and 13% respectively. Performance segment profile diversified with the addition of new HALS and HALS 701 and 770 in particular. However, realization impacted the growth. Pharma and agro segment degrowth was glycol-led, which recovered in H2, while DCC contributed positively to the growth. FMCG segment contributed positively to the growth. The newer segment, particularly HALS 770 and 701, continue to demonstrate sequential uptick quarter on quarter with volume-led increase in sales by 40%. Of course, the base was lower. To summarize, on full year basis, 16% degrowth in sales was realization-led. In fact, rebound in volumes during H2 led to positive impact. Steady volumes despite destocking and global slowdown underscores the client stickiness and goodwill towards clean science. We are indeed grateful to our customers for placing their trust in us. Further, new products contribution increased to 23% from 18.5%. A little bit on the capex. We've incurred the highest capex in the history of company, approximately 235 crores during FY24. This includes investment in subsidiary of rupees 215 crores. During March 24, the operations at CFCL were commercialized, which is in line with our earlier given guided timelines. Further, we have also set up a state-of-the-art pilot facility operating at significant larger scale. This will further accelerate timelines for our new process commercializations. We are on track to commercialize the capacity for pharma intermediate by Q3 FY25. Capex outlook. We are progressively positive on our new trial runs for our new products under performance segment, and we are in process of firming up next leg of capex as we analyze more outcomes of these trial runs. We will announce the capital commitment accordingly towards the new projects in due course of time. ESG. We look forward to outline the ESG targets set by us for the next 5 years in upcoming annual report. We are on track to keep the emission levels, share of renewable electricity and specific energy levels, consumption levels within the target levels. We have commercialized 1.6 megawatt maiden rooftop solar plant at our new subsidiary Clean Finochem Limited. To summarize the highlights of the year gone by, the decline in revenue during H1 was primarily volume-led. Progressively, volumes recovered during H2. In fact, volumes have surpassed during Q4. The sales profit diversified product-wise and geography-wise. Despite decline in revenue and product diversification, company reported steady EBITDA margin of 43% for the full year FY24, which is in line with FY23. On capex front, the commercialization has been within cost and time guidance. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Rajesh Mangal Agarwal from Rajesh Agarwal & Co. Please proceed.
Yeah, good evening. Am I audible?
Yes, sir.
Yeah. Thank you. Thank you for the opportunity. I am a retail investor, and I want to know whether this CFCL is only our subsidiary, na?
Yeah. There are 3 more subsidiaries, but those are non-material in nature.
Okay. And in our presentation, you have shown this investment. This investment pertains to the investment made in subsidiary, I think.
Yeah. In the current asset book, the investments are the investments in the treasury book. In the non-current, the majority is into the subsidiary.
Okay. Just tell me one thing, boss. In this investment in the financial year 31st March 23, we have shown this position at 281 crores. And right now we have shown it at 292 crores. And we said that we have invested 215 crores in this CFCL.
Mm-hmm. Yeah. So that's
how this figure outline?
Yeah. So that's what I refer to non-current investments, the long-term investments, where you'll see the increase, which is increase in the subsidiary. The number which you are referring to is the investment in the treasury book, which is shown in the current portion.
Okay. Correct. Thank you. And what this CFCL is commercialized in March 24. Okay. So how much we expect the top line growth and EBITDA margin from this CFCL?
These are, sir, futuristic statements. So we would like to avoid making such future statements.
No, but being an investor, I think company don't have any problem to give this guidance.
See, typically, if you see our past record, this is as per our past record, our asset turn has been close to 2.5 to 2.7.
Okay.
So based on the investment which we have already made, hopefully in the next 2 to 3 years, the top line should be closer to 800 crores based on the investments which we have already made. This is again as per our past records.
Correct. And what is the work in hand, order in hand right now?
We don't work like a contract, like a long-term contract on these businesses. These are quarterly basis businesses or monthly basis businesses because primarily our first markets are Indian market where these UV stabilizers will be sold. So these are decided on monthly or on quarterly basis.
Okay. But from the revenue mix by geography, I come to know that the Indian market is in FY24 is only 36%.
So that I was talking about only CFCL, about the subsidiary. What you are talking about the clean science as a whole.
Market is only in India?
No. It is not only India, but our first market to go market is Indian market because there are huge imports of these UV stabilizers into the Indian market. So hence these are our first markets. We have already started exporting to Europe, but we don't have these long-term contracts for these businesses.
Okay. Thank you for this answer. Thank you.
Thank you, Rajesh. Thank you so much.
Thank you. Next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah, hi, good afternoon. Thanks for taking my question. Couple of them. First one, help us understand X of HALS, what has been the growth in volume for this quarter? I think that the whole point is to understand whether the underlying growth in the volumes will remain strong.
HALS is a small quantity.
No. HALS is a small portion, Sanjesh, because it is just recently commissioned. But the other products which we had, like the antioxidant, say DCC or TBHQ, these products which were running at lower capacities have now started picking up and are running at decent capacity levels.
So the growth in volume is across the categories, across the product.
Absolutely, for all segments, all products.
And there is no one-off in this.
That's fair enough. Second on the HALS, I just wanted to understand now that we have ramped up and there has been a visible growth. Can you Siddharth, talk a little bit on 770 and 701, because I think 770 was more an Indian product, 701 was more of an export product. How has been ramp up in each of these product, customer approval?
So let me start with 701. So again, as I mentioned, these are variety of applications, but majorly is into water treatment chemicals. The major market remains out of India. And fortunately for us, of course, it has taken, because these are export products, there are large customers who have never bought from India before. So we have now, I can say that we are approved with almost all the major accounts globally. That is one good news. Second, we have now started giving trial orders or commercial shipments to all of these suppliers, to our customers, I mean. And I think over the next 3 to 5 month time frame, we should reach a decent volumes of about 1,000 ton per annum basis.
Okay.
So that remains in 701. In 770, as I have said that, gradually we will, the Indian market should start picking up for us, which has happened a less slower than as we had anticipated. But currently we have at least, I think, 50% of Indian market is now supplied by Clean Science. And I think over the next 3 to 4 months period, I think this number from 50 should become 60 to 65. With our other range, which are now starting within the next 3 to 5 weeks time frame, the confidence of customers that we have more products into the basket, the pickup in the Indian market should gradually again increase, and our endeavor is to touch 70 to 80% of the total Indian market for all these halves should be with us. Regarding export market for UV 770 in particular, because that is a product which we have commercialized, we have already shipped material to Europe, Middle East. Now we are already in discussions with customers and distributors in North America for these entire UV range.
That is super helpful. Just a couple of clarification here. One, first on the 770, we are already 50% market in 770. That's what you said, right?
That's what I said.
But it is only for an EV application, or you are telling entire 770 as a product we are 50% market share?
No. It is only India was buying between 200 to 250 tons. We are already selling roughly 100, 110 tons a month now to Indian market. So on that basis, I assume we are already at 50% market share.
Oh, that is very, very good. And pricing, how much discount there would be today to the imported pricing?
See, typically this product is now about a discount of 2.5% to 3%.
Oh, that's it.
Because we give that advantage of not letting them stock the material. We can do just-in-time supplies, which our competitors cannot. The European competitors certainly cannot, even the Chinese cannot. And small buyers who are buying between 3 ton and 5 ton, they have to typically buy a full container from our competitor, whereas in my case, they can only buy what they need, So they don't, these are additional perks which I am offering along with 2 to 3% price discount.
Got it. Second follow-up on 701, Siddharth. I thought earlier we thought it was agro intermediate, and that's where the large demand was there for 701, and now water treatment is an additional market. Where are we in that pharma intermediate as a product for 701 or application for 701?
No, that was PBQ. 701 never had any market in agro. That was parabenzoquinone. 701 has a big market in water treatment and some intermediates which companies make which they don't want to disclose to us.
Okay. That's fair enough. One follow-up on 770, because we are already 70-80% of India market. That means we need to incrementally place our product in export. You did mention that European Union, Middle East and North America are opening up. how do you expect that ramp up to happen? And second is that we earlier said that by end of March we want to see 200 ton per month. Do you think you can exceed that with this kind of already sales coming in?
See, first of all, I said 50%, not 70% Indian market. So we are already at 50% Indian market. That is one correction. Number two, export market typically takes a little longer because, the approval process, then appointing right distributors, stocking the material in USA. So USA could take a little longer, though I would love that things should move as fast as possible. But touching 200 tons by next March should be doable. I don't think it is absolutely non-doable, but you will have to give me 2 more quarters to see how export market picks up.
Fair enough. Just one last question before I join back the queue. It's more numerical in nature. The other expenses is today at 41 crore per quarter. Have we reached the peak cost in terms of operational in all the plants commissioned, or there is more cost which is yet to come in the coming quarter?
Yeah. No, at Clean Science, it's almost baked in.
Okay.
Because the capacities are operating at optimal levels.
And for the subsidiary?
Subsidiary, the overhead absorption rate will increase as the operations scale up. It was just 1 month of operations.
No, that I got from the margin perspective that will play out. From the cost perspective, there is more cost which is yet to be recognized in the P&L. This is more from modeling perspective, how to build the cost.
Additional costs will flow in as the new plants also commercialize.
Okay. So out of 17,000 metric ton of HALS which we were looking at, how much of that capacity is already commercialized and how much is yet to be commercialized?
No, we'll share that in subsequent time because it's not 17,000, it's 10,500 ton which we had announced to exchange for HALS.
Oh.
So out of that only 770 is commercialized and further new products will announce in due time.
So we are taking one product so the capacity is all installed, but we are taking one product at a time. So we take one product because these are large capacities. So establish it, let it work, then go to the second product rather than starting everything together.
That is fair enough. But just that one operational question. All these plants are dedicated plant or multi-purpose plant because they are all from the same family, right?
Oh, absolutely dedicated line. See, so the main intermediates are common, okay, which are the basic starting material for all the HLS, but the subsequent lines are dedicated lines.
Okay.
Because every process is a very different process. Now, UV 770 is a 3-step process, but UV 944 is a 7-step process. So there cannot, plus the raw materials are absolutely different despite being in the same family.
So how many initial steps are common or how large is a common facility for the feedstock? And
there are only 2 common feedstock. One is called TAA and one is called TNP. So these 2 feedstock are common for all the HLS. They are basically the building blocks.
Correct.
So those capacities are upward of 10,000-12,000 tons. So those have been operational now. Of course, to whatever requirement we have, we are only running to that. But rest lines are all individual lines.
That's very clear now for me. That's super helpful. Thanks, Siddharth. Thanks, Pratik, for answering all the questions and best of luck for the coming quarters.
Thank you so much, Sandesh.
Thank you.
Sir.
Next question is from the line of Parth Mehta from Vallum Capital. Please go ahead.
Hi sir, good evening. Am I audible?
Absolutely, sir.
Yeah. Sir, just two bookkeeping questions I had. One is that we have a higher inventory and receivable levels in terms of absolute value and number of days. So just wanted to understand what has led to this increase and how do we plan on reducing this?
Right, yeah. So inventory, as you rightly pointed out, on value basis, it's almost in line with last year. But as you would have noticed, quarter on quarter, there is increase in sales. And Q4 was a best quarter for this year. That's why the inventory shows up a little higher number. Apart from that, the WIP stock is also a little higher. Otherwise, raw material or finished good inventory is less than 30 days, so there is no price risk there.
Okay, great. Thanks. And just another one. If you can help me with the capacity utilizations for our MEHQ and BHA.
No, so we share segment-wise capacity utilization. Product-wise, we are not sharing. So for this quarter, performance segment, the utilization was close to 70%.
Okay, and other two segments?
Yeah, so pharma was also in that range. FMCG was little higher, close to 75%, which is 4 MAP.
Okay, great. That helps. Thanks.
Thank you.
Thank you. Next question is from the line of Ankul Periwal from Axis Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. First, continuing with the discussion on HALS. Amongst the other products that we are supposed to launch, 701 is domestic focused. How are the other products? They will be largely export focused, or there will be a mix here?
First, 701 is export driven.
Sorry, 770
is domestic, as well as export. The next products which we are going to launch probably in the next 3 to 4 weeks are 622944, where they are both markets. I mean, domestic as well as export. But of course, because now we are people know us now more in domestic markets, so of course the first point of sales would be from domestic markets. Following this would be 119 and 2020. Again, they are partly domestic but largely exports.
Sure. And since you mentioned 50% of 770 is already being captured by us, what will be the total size of India across, let's say, these 6 or 7 products that we are planning?
So 770-622-944, if volume-wise, I think it should be closer to 350-400 tons a month. I mean, put together everything.
Yeah, correct.
About 5,000 tons per annum.
5 to 6%, yeah.
Okay. Fair enough. So these will be, so to say, the earlier or the low-hanging fruits for us, which could be sort of captured in the near term, and exports, as you mentioned, will take some time for us to ramp up.
Absolutely, sir.
And when you say,
sorry, just a little point there. See, originally when we started 770, also it was a very tricky to convince. But now that customers also overseas have heard about us, so I think going forward for 622944, it should not be as uphill as it was to start with 770, because there would be same distributor, same customers buying these products as well.
Yeah, sure. So which was my question as well. So distributor-led network is already in place, but the core product approval, which probably the client will take, how much is that time typically?
3 to 6 months.
Okay, great. And pricing-wise, you mentioned India discount is only 2.5-3%. How are we placing, let's say, 770 or maybe even 701 in terms of pricing globally?
See, 701, I think again the discount is less than 5%, because the advantage we have is 701 is typically made by only the Chinese company. So we are the first non-Chinese company producing 701. Okay? So that gives us a little advantage. In 770, again the difference, delta which people are asking is about 5% max globally.
Okay. That's great. Secondly, on the revenue mix here, you did mention, on a FY24 basis, we are give and take flattish on volumes on a Y-on-Y basis. If I look at specific geographies, China and maybe, Europe has seen a sharper decline year on year. If you can help us get some sense on, how has been the volumetric growth or performance across the international markets, China, Europe, and US largely.
See, basically, we are seeing increase in Indian markets. because of these products, 770 in particular, and also our pharma intermediate, also our antioxidant for food and feed industry. So hence, Indian market is growing for us. Europe, North America has been very, very steady for us. Of course, North America, Europe in particular, with these UV health sales picking up, should slightly increase. North America has been flat because there is no new product which we have sold in the United States so far.
Okay, so Europe, you mentioned on the existing portfolio, we are flattish year on year, or there is a dip in terms of volume?
There is a gradual increase for new products, but in terms of our existing products, because of the client demand, there has been a slight reduction. So net it should be flattish.
Sure. And health will be Europe will be a bigger market for health.
Yes, that's the hope.
Yeah, great. And just lastly on the margins front, now given as we ramp up, let's say health or the other products also, which we have seen a pretty healthy recovery overall in terms of volumetric growth, where do you see margins stabilizing on a blended basis?
See, on blended basis, as on today, because there is stiff competition from China, and of course, see, any time when there is a new entrant in the business, there is always a stiff competition. Customer also do not want to discount us on pricing, plus it takes a larger time for approvals. So on blended basis for this year, we are not targeting more than 15%
For the subsidiary?
For the subsidiary. For the new products in the subsidiary, which is mainly HALS.
Okay. Okay. No, so my question was more on a medium term, not immediate this year, but let's say 26 or 27, once the subsidiary also sees some ramp up.
Then I think we should touch about a 25% margin
on the subsidiary business. Okay. Great, Siddharth. Thank you. That's very helpful. Thank you.
Thank you. Next question is from the line of Arun Prasad from Avendus Spark. Please go ahead.
Good evening, Siddharth. Thanks.
Good evening, sir.
So we spoke about the HALS 701, 770 in detail. On this other grades, that is 622, 944, etc. End customers are same. Distributors may be common, but if the end customers are same and applications are the same categories, or is it different?
Paint categories. So paint, there are...
No, end categories. End categories.
Can you please repeat the question, Arun?
So I was asking the grades, the other grades, which you will be obviously scaling up, the end customer is same or is it different?
No, same. So only difference is different in quantity. So there could be a customer who could be buying bigger quantity of 770 and smaller quantity of 944. And there are other customers whose requirement of 622 944 would be higher than 770. So the customer base remains more or less the same.
Okay. So which means that you already once you tap 770, you will be, that's the reason you are confident that you will be able to scale this up faster.
That is the hope, sir. And that is what we also feel, that because when we started 770, people had not even heard about an Indian producer, and people were not confident of our qualities and supplies. But now that we have been successfully supplying over the past 1 year, so that confidence has risen dramatically. So now when I launch the other range of products, it should not be a very, not as difficult as 770 was.
And what is the price difference of these grades with respect to, say, 770? How premium these grades are?
So 944 is, suppose the 770 is $5, 944 should be $9, 119 should be about $10-12. So these are all expensive. I mean, 770 being the cheapest.
Right. And our capacity, I heard you that the intermediate is common, but downstream to the intermediate, that is TMP and TAA is different. But how fungible are these capacities? The question is, if tomorrow if you want to increase more of the high value grades, will you be able to do it, or you need to put another further capex to this?
Sir, as on today, whatever I have installed, at least if I am able to use for the next 2-3 years, I would be more than happy.
Okay. And our guidance of 30 utilization over the 3 years, that stands same?
Yes, that stands the same still.
Okay. So that means by the year end, we should be seeing 5,000 tons of sales on annualized ton basis, right?
By year end, we should see year end by March, right?
Right.
We should see about 3,000 tons.
But majority, it's 770 will be.
Yes, to begin with. Yeah, you are right. But the others will also start.
Right. Understood. My next question is on the mix, domestic export mix. During this year, obviously, the domestic has done very well. We can see that in terms of value terms, is also it is good 9% growth, but export as a whole has been 25% reduction. Is it more because of the competition or a mix? How should we think about this? And how we should be think about the recovery? Again, the recovery will be again swifter in this export market?
Relatively comment overall to destocking time.
So overall, the domestic market increased because of these pharma intermediates which we mentioned, FMCG chemical, and hence in that proportion the export percentage has reduced.
Okay, it is mainly related to mix, what I understand, because your voice was not completely audible in the beginning.
Yes, it is. It is a mix. You're right.
Right. And obviously there is because of the destocking in this year,
yes.
Our overall volumes at the yearly basis will be lower. So if we have to assume that this will recover, what is the potential volume growth that we can see on this lower base in this year?
Sir, now in Q4 we have seen a lot of volume growth coming back. Now the next volume growth for FY25 will all be from the newer plants and the new pharma intermediate which will start in Q3.
Okay. All right, sir. I think thanks for answering all the questions. All the best.
Thank you, sir.
Thank you. Next question is from the line of Jason Soans from IDBI Capital. Please proceed.
Yeah, sir. Thanks for taking my question. So first question is, just wanted to know the other expenses this quarter have seen a sharp jump. So any one-offs or anything in that respect?
We sold our old office.
Other expense.
I thought other expense.
You're looking at quarter-on-quarter, right? The other expense.
That's right. Yeah.
It's basically the CSR expense, which was not there in the earlier quarter.
Okay.
That led to one. The other is this new products which got commercialized. So these were incidental expense, manufacturing expenses, but primarily it was CSR expense.
Okay, from 146 million, it's gone to 226 million. So basically, it's because of CSR and new product expenses.
So looking at console numbers, right?
Yeah, that's right.
Yeah. In that case, it's subsidiary numbers also. I was talking about the standalone number. CSR is not applicable for this. Yeah.
Okay. Sure. And sir, next question, just wanted to know, there is a domestic player who's started a capacity in our principal products. Just wanted to know what your view is, in gearing up to fend off this competition.
So far, we have not seen the product. If you have seen, please let us know.
Okay, sure, sir. And sir, just wanted to know, you did speak about a progressive volume growth, So just wanted to know in terms of, is it more of a market share gain-led growth, or is it that the end user industry growth is coming back what is the exact reason for this volume growth coming in?
Yeah, I feel H1 was such a washout because of destocking, and I think H2 was volume recovering. I would not say that we have increased market share or anything. I think the best to describe would be that we have recovered whatever lost volumes we had in H1.
Okay. And sir, with the 15, overall on a year basis, we have basically revenue has degrown by around 15 to 16%. So volumes must be flat on an annual basis, on a ballpark number?
Yes. Yeah, that is flat.
That's flat. Volume is flat. So 15% realization roughly. Okay. So just want to understand, sir, for Mequinol, I understand that it's used as a polymerization inhibitor, but I just wanted to know from you that, of course, that is also used in skin lightening as well. So in terms of our product, does it require a pharma grade Mequinol? Or, if we are able to cater to that market, or are we already catering? Does that increase the scope of Mequinol as such for our product?
No,
or we don't cater to the skin?
No, we are not catering to any skin customer, because I don't think, it says it is a skin lightening agent, but
right.
I don't think it is recommended maybe, but I don't have any skin customer.
Okay. Sure.
And I don't have a pharma license. Yeah.
You don't have a pharma license for the MEHQ. So, okay.
Because nobody has asked us ever.
Okay, no, my question was just from the perspective that if we do cater to that and we already have an expertise in that, so then it might increase the scope of our product, or help us add more revenue.
What happens is, sir, Wikipedia gives a lot of usages, but in practical life, these usages are not there.
Okay, sure, sir. And sir, you did speak about HAL 770, you basically having a discount of 2.5 to 3% as compared to the imported products. So just wanted to know, in terms of the other HALS products which you just mentioned, do we have a similar pricing strategy for those products as well? Of course, 2.5 to 3%.
I think so, sir. We should follow the same trend, the 3% discount plus, inventory saving for these guys.
Right.
Should be a decent incentive for them to look at an Indian producer. Homeland producer.
Okay. And sir, you mentioned 5,000 tons demand per annum, that you are only talking about the new HALS products, right? Which you are going to introduce. The 5,000 tons demand per annum.
When I say HALS, this is all including everything, all put together.
Okay, all put together. And sir, just one final question, just wanted to know, this pharma intermediates capacity which is coming in Q4FY24. So what therapies or what pharma application would it be going into?
Antiretroviral.
Antiretroviral. All of that. Majorly going to antiretroviral. Yeah. Okay. Those were all my questions. Thank you so much, sir.
Thank you.
Thank you. Next question is from the line of Abhijit Akela from Kotak Securities. Please proceed.
Yeah, good evening. Thank you so much for taking my questions. So, first of all, just a clarification on this pharma intermediates capex. Last quarter we had mentioned that maybe the 100 crore capex we could perhaps start in April or May. I think we're now still in the evaluation stage. So is there a timeline by when we expect to sort of start working on these couple of intermediates?
30 crore is the capex for pharma intermediate, which will start in Q3. And additional 150 crore capex is based on the pilot runs which we are running. As soon as they are successful, the additional 150 crore capex will be made, and announcement will also be made for the same.
Okay. Sure, understood. And the other one was just to clarify with regard to what we said about HALS, the volume ramp up. By March 25, we are expecting 3,000 tons or so of volumes from our end.
Yes, that's the hope. 3,000 ton March 25, so about 1/3 of capacity.
Got it. And then progressively scaling up over the next couple of years. And we are targeting, probably because of the unabsorbed overhead, not more than 15% margins in fiscal 25. But as it ramps up to full utilization, we are looking at maybe around 25% or so.
Absolutely. When we reach the peak, plus when we get all the premium customers globally, then I think we should target about 25%.
Got it, sir. And the pharma business also, would it be comparable in terms of margin profile, the one that you're looking at?
I think that would be better, much better.
Okay. Got it. Understood. Thank you so much, sir, Siddharth. Wish you all the best.
Thank you, sir. Thank you, Abhijit.
Thank you. Next question is from the line of Sujit Lodha from Birla Sun Life Insurance. Please proceed.
Hi, sir. Thanks for taking the question. So just one thing on the pricing. So when you mentioned that tiles is you're selling it at about 3%.
Louder, can't hear.
Hello, am I audible now?
Much better.
Yeah. So when you were referring to that the pricing for health is right now 3% lower to competitors, sir, what we understood that there is some import duty benefit also which you get. So is it adjusting for that or that benefit remains? There is an import duty which is there on this product, right?
See, so there are some customers who buy against deemed license. Mm-hmm. So in that case, we are adjusting the price. And when it is duty paid, again we are adjusting the price. So we have two prices of the UV770 pre in India. One is for deemed license, one is for deemed export, and one is for regular business.
Okay. And how much is that duty, sir? It's 15%.
7.5%.
7.5%. Oh, okay. So, secondly, on this products, when you say that as you get into more value-added products in the health category, more high-end products.
Again, louder, Sujit.
I'm so sorry, sir. Regarding the health products, wherein you get into the higher value products, does that mean your gross margin as a percentage also goes up?
Yes, absolutely. Absolutely, because my fixed cost will also start coming down because, as you are aware, it is a common. I mean, it is not a common, but it's a large block. So my fixed cost will keep coming down as my volumes ramp up start happening.
No, I was talking about the gross margins. So the gross margins are also higher.
Yes, gross margins will also be higher.
Okay. That is the two questions. Thank you so much.
Thank you so much, Sujit.
Thank you. Next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. So first question is, you outlined the pharma capex 30 and 150 depending on the pilot studies. Similarly, for performance and the FMCG segment, are there capexes lined up given that these capacities are also currently operating at 70-75% utilization levels? Thank you.
30 crores pharma intermediates, 150 crores performance chemical.
Oh, my bad. And FMCG, anything?
Not yet, sir.
Sure. The second question is in terms of health. Again, when we are exporting, what is the value proposition that we are providing to the customer, given that the customer is currently being served by the competitor? So is it only based on the pricing or anything else that we are looking at?
Geographical advantage. We are non-Chinese, non-European.
All right. Sure. That's all from my side, and best of luck. Thank you.
Thank you, sir.
Thank you. Next question is from the line of Aditya Gupta, an individual investor. Please go ahead.
Hi, sir. Thank you for taking my question. You already mentioned that we have about 2.5 to 3% discount in health at the price broadly we are selling at. I just wanted to put that together with a few more statements we had earlier. I think one thing we mentioned was that broadly the selling price the realization we are expecting at a blended level for health is about $9 a kg, if I remember that correctly. So would we be with that discount broadly still be operating in that range, or has there been a sharp downturn in the market price for health in particular as some of the media reports recently suggested?
Sorry, boss. We have not understood the question. Can you please repeat?
So broadly for health, are we roughly in the range of the $9 per kg that we had guided earlier, or are we operating much below that?
7 to 8 now. On blended basis, huh? So 770 is cheap, 944 is expensive, 119 is expensive. So on blended basis, it is $8, you can assume.
$8. Okay. And the second question is a basic bookkeeping question. The new pharma line of products that we are going to add, that's going to be in the subsidiary or in the parent company?
Subsidiary. Now everything is in subsidiary. Now we have no space in parent.
Understood. Okay. Thank you, sir. Thank you.
Thank you. Next question is from the line of Hussain Baruchwala from Carnelian Capital. Please go ahead.
Hello.
Yes, sir.
Sir, I just wanted to understand what will be our tax rate in FY25? What can be the tax rate that we can assume? So 24 we had approximately
Not clear, boss. We are not clear. The voice is not clear.
Sir, we had a tax rate of around 10% in FY24. So what is the tax rate we can assume in FY25 for our calculation?
No. Clean science is 25. Subsidiary is 15.
Okay. Okay. The subsidiary is 15. Okay. Got it. Okay. Thank you.
Thank you. We have our next follow-up question from the line of Rohit Nagraj from Centrum Broking. Please proceed.
Yeah, thanks for the follow-up. So in terms of our standalone business across the segments, what is your understanding in terms of pricing, whether the pricing has stabilized? And in terms of volumes also, the inventory destocking was more or less come to an end, given that we have shown volume growth. So on these two aspects, what is your understanding, particularly from the exports market? Thank you.
So I think in export now volumes we are seeing back. Prices, see, as on today, I assume the prices will not go below these prices. These are the lowest prices for all the products in all the segments.
Sure. And just one clarification in terms of China. So we've been hearing generally that China has added capacities over the last couple of years across different set of chemicals. So have we heard anything, from a competitive point of view in our range of products?
So China, you are right that they have added in all capacities, in all segments, including Indians have also done that. In our range, I have not seen any Chinese in this particular range, and hence our volumes have remained intact in the China market. Of course, there is always the conventional process which the competitor can take to produce our products, and hence we have to keep pricing in a manner that we are still more competitive for the buyers to buy.
Sure. Thanks a lot and all the best. Thank you.
Thank you, ma'am.
Thank you. Next follow-up question is from the line of Parth Mehta from Vallum Capital. Please go ahead.
Yeah, hi sir. Just one clarification. You mentioned that we are at a capacity utilization of 70% in performance chemical and pharma and 75% in FMCG. So are we at the optimal level, or is there any scope for better utilization in these segments?
No, in clean science, yes, we are at optimal levels.
So we do not have any scope for incremental volumes from our existing products?
Correct. Largely yes.
Okay, great. Yeah, thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Siddharth Sikchi for closing comments.
So thank you so much for everyone to come and attend our earnings call, and I hope we have been able to answer all the questions well. If there is any further questions, you can email us so that we can clarify if there is any further doubts. Thank you so much for your time again. Bye-bye.
Thank you. On behalf of Clean Science and Technologies Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.